Hello and welcome. You're watching News9. I'm Shweta Kothari. This is Business Plus. We're bringing you stories from the world of business, policy and economy. To my left is Suyash Maheshwari. Suyash, good afternoon.
Good afternoon, Shweta.
Market ending in green and, starting in red and ending in red, of course.
Yes, Shweta. So the Indian markets have extended their losing streak to 2 sessions now, and the market opened lower by about 0.5% or so, where we saw Nifty even slipping below the 19,400 level in the morning trade, and taking support somewhere around the 19,300 mark. Now, in the afternoon trade, Shweta, the benchmarks were able to pair those losses, and in fact, I think one of the things that bulls will take, from the today's session was that the markets ended near the day's high. Now, despite that, the markets still ended about 0.4% lower in today's trade. At close, sensex was down 286 points, and it closed above the 65,200 levels, whereas Nifty rescaled the 19,400 mark and closed marginally above it. Now the broader market, Shweta, which we have seen have been outperforming for the past many months, came under selling pressure today. Nifty mid-cap and the small-cap indices both corrected by over 1% in today's trade. Now, if you are also looking at the volatility index, the India VIX slipped by about 1.63% in today's trade, and it slipped below the 12 mark, which suggests that the volatility going forward is expected to be lower. Okay. Although with RBI's MPC coming forward, I don't really understand why the volatility will fall. Perhaps Ambreesh could enlighten us on that. Now, let's also talk about the sectors. Now, barring FMCG and the IT pack, most sectors ended today's session in the red. Now, among the sectors which fell over 1% was Nifty Auto, which corrected by about 1.3%, Nifty Financial Services, which corrected about 1.27%, Nifty Media, which fell by 1.72%, Nifty Metal, which also corrected by about 1.06%, Nifty PSU Bank, Shweta, which if you remember yesterday surged by about 2.5%, saw some correction today amid a broad-based selling in the banking pack, and it corrected by 2.83% in today's trade. Realty was another one which corrected by over 1% in today's trade. Now, I also want to touch specifically on the banking pack. Most stocks except, guess what, HDFC Bank ended today's session in the red. HDFC Bank was the only constituent stock in the Nifty banking index that was able to post some gains, and it posted gains of about 1.5%. Rest, all of them saw heavy profit booking led by a sell-off in PSU banks, and the index has slipped below the 44,000 levels for the very first time since September 1. So this could be a major drag for the index going forward. 44,200 was being looked at as an essential or a make or break level for the index. The index did slip below that, and it settled below the 44,000 mark. So perhaps there is some pressures remaining for the
Okay, let's understand
back.
what those pressures are. Ambreesh Baliga, independent markets expert, joining us on the show. Ambreesh, thanks very much for taking time out. Good to have you back, sir. We've seen a sharp rally at the start of the month, and now we are looking at a sharp fall for 2 consecutive trading sessions now. What are you making of this consolidation? Is the worst over? Hopefully there'll be recovery now. Green shoots from next week onward. When does this onslaught ends?
I doubt whether we can call this green shoots because the way I see it is possibly this is the beginning of a correction, which I've been talking about for a while. And every time we saw that the markets were taking very good support at that 19,500, 600 levels and moving back. But now, since that is broken decently, decisively, despite the sort of bounce back which we have seen intraday today from the lower levels, I think it was a very spirited bounce back. But I doubt whether this bounce back can really last too long and go beyond that 19,500, 600 levels for that to sustain. Because there are, a decent number of red flags around, right from the oil prices, the way they have been moving, expected Fed hike before the end of the calendar year. And again, as far as the earnings are concerned, Q2 earnings should be starting within a week. And again, out there, the expectations, have been decently high looking at the way the run-up we have seen in the markets for the last 4-5 months. So there could be a room for disappointment, and with that, I think that could be another reason for the markets to correct. And last but not the least, I think the elections, I mean, both assembly as well as general elections next year. I mean, as we are getting closer to that, that should add to volatility and some amount of caution. I mean, although people may have a view that the same government will come back, post the Lok Sabha elections. But whatever said and done, elections means certain amount of uncertainty. So I think because of which we could see more volatility in the markets. So I really don't see too much of an upside for the market. In fact, I mean, if you ask me whether the markets will see 18,500 first or 20,000 first, I would say 18,500 now.
All right,
Wow.
and of course that's a very significant commentary. But what's your near-term support for Nifty as it breached 19,500 as of today? What's the near-term support levels you're looking at?
I mean, if I could also jump in here, October has been a historically, a good month for the markets. And do you expect that 18,500 to come this month, or perhaps this is a, a longer term
The
outlook?
timeline, perhaps, if you can give on that 18,500.
18,500 this month because 18,800, 18,900 is again another decently good support technically. So if that gets broken, yes, I think we'll see 18,500 levels or below immediately post that. Like just like the way we are talking about 19,500, 600 for a while. I mean, till that was broken, I mean, it took a while for that to be broken. But then once that was broken, we have seen a sharp correction from there. So similarly, we'll have to see as to how long it holds on to that 18,800 mark.
Okay, and what's the timeline you're giving it at the moment? How long should one wait and watch out for that, 19,000 mark to be breached or 18,500 to come in before they can start jumping the queue once again?
The way I see it is we should see that possibly in a month, month and a half. Basically, because like I said, earnings season anyway is starting off, and along with that, if we see the oil, I mean, going closer to 100 or crossing that, I think that could be a major trigger for the markets to go down.
All
Now,
right,
Mr.
that's a very
Baliga,
major sort
yeah.
of commentary for all those who are watching markets at the moment. I mean, so far, one of the sharpest commentaries I've seen in the past 1 month from Ambreesh Baliga as to whether it's going to be above 20,000 first or below 18,500 first.
That's a big drawdown. I mean,
Big drawdown,
what are your
absolutely.
expectations from the Q2 earnings? Will that be a disappointment and perhaps pull the index to those kind of levels?
That could be like one of the reasons, and we could see stock-specific movements in that. Like I said, I mean the way the markets have run up, and with the Q1 earnings which were decent, the expectations for Q2 have been moved up by the analysts. So whenever your expectations have gone up and the performance is not as per that, so that leads to a disappointment. And I see a decent amount of disappointment possibly happening in Q2 because of that.
Any particular sectors that could disappoint?
Sector-wise, clearly, I think metals will see disappointment. IT could underperform anyway. That expectation is there, but once it is out in black and white, I mean, we could see a further correction in the IT space. So I think these two spaces need to be looked at. And at the same time, I mean, if you're talking of the export sector, I mean, the sectors which are dependent decently on exports, I think that is where we have seen some amount of slowdown. So we could see underperformance also from there.
All right. I have two questions for you. Since you talked about exports, Amrish, I want to first understand the government is very upbeat on exports. And Commerce Minister has time and again said exports are picking up, and you can see it in the way of narrowing, current account deficit. Do you see exports picking up in the next, month or so?
See, the thing is, we may like to export, and there could be decent amount of SOPs being given by the government. But then, if the global economy is not really performing, it's a bit difficult for you to keep pushing exports. So, I mean, if you're talking from a short to medium term perspective, I see the exports, I mean, not really doing too well. And again, if you're talking of IT, I mean, that's clearly seen out there because discretionary spends are being controlled, and that is affecting the IT space. So it's similar across, I mean, the other your goods which are being exported. So I think if you're talking of the next 2 to 3 quarters, we could see some amount of slowdown. But I think post that we should see some, I mean, a decent up move from there. But
right.
whatever said and done, I mean, although I may look bearish, look very cautious, but then if you're talking of Indian economy over a longer term, if you're talking of the next 5, 10 years, I think we will clearly be the brightest spot. I mean, globally, and this fall, which I'm talking about, should be utilized to buy and I mean, completely fill up your portfolio.
Absolutely. I was about to come to that. So my next question, what should the retail investors do at the moment? Should they wait and watch out? Should they be on the sideline, not jump
Considering
in?
you are expecting a 5% correction
Absolutely.
in markets.
Considering the amount of correction that you're expecting over a very short span of time, what should retail investors do?
See, I mean, most of the retail investors would have bought mid cap and small caps in huge quantities in the last couple of months because that is what was performing. So I mean, if you're sitting on decent amount of profits, I think it's time to book out because the mid cap index has just started falling. So most of the stocks would still be in profits. So book profits. I mean, hold that cash for the markets to correct, and then possibly buy again at lower levels. But when you buy, one should buy decent number of large cap and blue chips also because that is what gives you that stability in the portfolio.
Now, Mr. Baliga, I also wanted to touch upon mid caps, and since now you have mentioned that there could be correction, the overall breadth of the mid cap spaces has also been reducing. You know, the less and less number of shares are participating in that rally that we have seen playing out, you know, over the course of the last 6-7 months or so. So
Right.
perhaps maybe now is the time to, you know, focus on large caps, book profits. I'm asking this because a lot of retail investors have participated, as you mentioned, and a lot of mutual funds, you know, mid cap oriented funds have seen a lot of inflows lately from retail participants.
No, because see, typically what happens is whichever part of the market performs or moves up, that is where the money flows in. And what we have seen in the past 5, 6 months is that the small cap and the mid caps have actually become multi-baggers. Some of them have become multi-baggers in the last few months. So it's quite natural that when people see profits there, they blindly put in. I don't know how many of the retail investors really look at the fundamentals. Most of them look at momentum and invest.
I mean, Shweta, is a classic case of when your taxi driver starts talking about the stocks, it's perhaps time to exit the market. So I think that's playing out in the mid cap as
Is
Mr.
it?
Valiga.
I would say it's the other way around. When your taxi drivers start talking about it, perhaps it's time to enter
Exit.
the market because, well, you know, as we have seen in the past 1 month or so, the extreme volatility, the highs and lows that we've seen in the market, that is when you expect a common citizen to keep a close watch and enter the market.
But that's
and
also when
perhaps
they can
makes
get stuck because, you know, if you
Absolutely.
if you're trying to buy that in that rally, you may end up buying it at a higher level and there is a sudden crash, and retail investors often turn jittery, and, you know, perhaps they tend to sit and wait if and see for some sort of a pullback in the stock.
Do you know, the
So
September rally has challenged a lot of my held notions about markets. The moment you'd say, okay, this is it, it's not going up further from here, markets touch 2,000, 20,000, and then beyond 20,000.
and
So
then they fall 500 points.
and then they fall 500 points all of a sudden. So all my previously held notions were in a way challenged in the month of September.
Certainly, it looks like so, and the markets have been, you know, seen extreme bouts of volatility playing out. And Mr. Baliga, what's your view on the banking space? Now, banking space has been a major drag on the headliners lately. You know, in the last couple of days, I think it was the correction that we were seeing playing out in HDFC Bank and ICICI Bank that was pulling down the headliners. What's your outlook, especially that you know, at least from a technical standpoint, we have broken that support level of 44,200 levels.
No, I mean, banking space overall, I'm not too bullish, but at the same time, I'm not bearish. I mean, I will not buy fresh. And any upside, especially in the PSU banking space, possibly I'll utilize to exit the holdings which I have. Because one, the PSU banking space, I mean, from a level where people had given up on the sector or the stocks, I mean, these stocks were like rediscovered about a year and a half back. And after that, we've seen an extremely good move, basically because most of the balance sheets have been cleaned up. They showed, I think, like record profits in the last 4 quarters. So clearly, I mean, the stocks had to move, and they have decently well. But from here on, I don't see the next leg of the rally, basically because one, the story is already known. And if you're talking of NIMs, the net interest margins, I think that's more or less peaked out for most of the banks in Q4 and the rest of the banks in Q1. Clearly, I think in Q2, this will be confirmed that the NIMs have started to correct. So when people see that and the performance may not be in line with what we have seen in the last 2 to 3 quarters, we should start seeing further correction in the banking space. But then I think the PSU banks will correct more than the private sector banks because they are the ones which have really done well in the past 6 months.
So what's your expectation on the private banking pack as you, I mean, are the valuations looking any reasonable now given that we have seen, a fair bit of correction in the space?
Yeah, in the private sector banks, I mean, one of them which I will possibly look to buy would be HDFC Bank. But again, I'm still waiting for a further correction, maybe closer to about 1425 or so. I think that's the level to start buying HDFC Bank. But again, not for a bump up. I think it will be at least about 2 to 3 quarters before we start seeing a decent move in HDFC Bank because whatever actions this management is taking, the CEO is taking, I think it'll take a while for it to really flow. I mean, show up on the balance sheet. So it will be maybe a 3 to 4 quarters sort of a hold. Only if one has patience of that, should one buy at about 1425 levels.
All right, Ambreesh, let's also quickly take a look at some of the stocks that we are tracking, specific actions on stocks this afternoon.
Yes, Shweta. So let's start with the gainers first. Now, Adani Enterprises was a top gainer in today's session. It rallied over 3%. Now, this was on the back of IHC buying, picking a stake of, worth 153 crores or 163 crores as per yesterday's closing. They have bought a stake from undisclosed buyer. The stake of about 0.06%, taking the total stake now to 5.04%. Now, if you remember last week, IHC selling stake in two of Adani Group companies was a major dampener for the stock, and today's reassurance that Adani is perhaps not going to lose a marquee player in IHC has boosted not only Adani Enterprises stock but also stocks of other Adani Group companies. And we saw, all of them post significant gains in the intraday trade, although there was some profit booking that took place at higher levels. Now, another stock among the blue chips that rallied today was Nestle. Nestle was up about 3% as well. Now, the company has said that it is considering its first ever stock split. And if you remember, Shweta, the stock of Nestle currently trades at about 22,900 levels or so. So a stock split will perhaps enable retail participants to also participate in that rally, because 22,900 is a very high price tag for the retail participants who have a small capital to begin with in the first place. So a stock split would overall improve the liquidity in the stock, will also help the company diversify its portfolio base. So perhaps that is playing out in the stock, and as a result we saw a 3% gain. Another reason is that Nestle is also considering a second interim dividend with its Q2 earnings that come out on October 19. Now, another stock that gained in today's session was Eicher Motors. Now, Eicher Motors has been under pressure for quite a while now. The stock is perhaps seeing some sort of a technical pullback. If you remember, the stock had corrected by about 3% or so yesterday after the September sales saw a degrowth, right. And the sales of Royal Enfield also declined about 3% year on year. I think there is some technical pullback playing out in Eicher, considering that other two-wheelers have posted decent gains of about 2 to 3%, whereas Eicher Motor in the last 1 month has been trading flat. Now, another bank we have been talking about, it was HDFC Bank. Now, HDFC Bank was a sole gainer in the Nifty banking space. The lender has now announced a restructuring of its top management. Now, this is the first restructuring post HDFC merger with parent company HDFC back in July, and it is also only the second restructuring since Shashidhar Jagdishan took over from Aditya Puri about back in October 2020. HUL was also another stock that gained today. It rose by over 1.5% after CLSA updated the stock to buy and raise the target price to 3,135, implying an upside of about 27% from the today's closing. Among the losers, Shweta, was Axis Bank. The stock snapped its 4-day winning streak to decline by over 4.5% in today's trade. Now, I couldn't find any particular reason why the stock fell, although there was a report from Hindu Business Line which suggested yesterday that perhaps Axis Bank could be looking to raise funds to the tune of 10,000 crore via QIP, although Axis Bank did come out today and said that the report is speculative and factually incorrect. So it played a dampener that the bank is not looking to raise funds. And SBI was also among the losers. It fell about 3%. Now, SBI is one of the only stocks, actually it's one of the few stocks in the PSU banking space that even the investors are still extremely bullish on. It has about 47 buy calls, which is the highest among the Nifty PSU bank constituents. IndusInd Bank also saw a decline of about 2.33% despite the company reporting steady growth business in its business update in Q2. Bajaj Auto saw a correction of about 2.2%. So these were some of the stocks that were in the news today.
All right, those are top losers and gainers, of course, for the Wednesday's trading session. Mr. Baliga, thanks very much, sir, for taking time out. Thank you for being with us. We'll get you back. We hope to get you back really very soon. To you too, Suyash, thank you so much for joining in.